Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin, Mota.
Well, Yatin, what a spectacular run we saw in the markets today. You know, it's a splash of green across the screen.
Absolutely.
We have come off Christmas with a renewed vigor, right? Given the fact that the bulls are raging on, 21,650 crossed comfortably today. The Sensex also managed to conquer that 72,000 mark for the first time ever. And the Nifty Bank Index, 48,300. We are inching towards that 50,000 mark on the Nifty Bank Index as well. And of course, there are talks of whether or not the Nifty manages to hit that 22,000 mark before we end the year itself. We'll have to see that over the next two sessions. If we continue the kind of momentum that we saw today, who knows, we may be staring at 22,000 on the index, this year itself. Two more trading sessions to go, Yatin. And, if you talk about the rest of the market, all the sectors were in the green. In fact, the Nifty IT pack also got a last hour boost, right? TCS was the top Nifty IT gainer. And if you look at the Nifty Bank Index, HDFC Bank, had contributed nearly 50% of the gains on the Nifty Bank Index today, Yatin. Mid and small cap indices, they were in fine fettle, but today they were underperforming the benchmarks. And, advanced decline ratio, Yatin, was in, at 1:1.
Correct.
That's a little surprising. Let's talk about that in a bit.
Yeah.
But if you look at the other Nifty gainers, Hindalco, UltraTech Cement, Bajaj Auto, JSW Steel, Tata Steel, these were some of the movers. On the flip side, few losers today. NTPC, that was among the top gainers yesterday under a bout of profit booking today. ONGC and, UPL, Adani Ports, Cipla, these were among the losers. But let's talk about the broader end of the markets. The advanced decline ratio, Yatin, 1:1.
Yeah, I think, there was some bit of profit taking in the mid cap index, and usually what happens, Nandita, that when you try to reclaim a record level, generally there is profit taking in the market. So there were fears today in the first half that whether or not this market will be able to close the previous high, whether or not this is a double top. So a lot of technical indicators were at play, and usually when the markets hit record levels, there is some bit of profit taking which happens. Obviously at the index level we did not find any profit taking, but yes, clearly at stock specific level there were profits which were being booked. But Nandita, today 3 new listings, and it's quite surprising that in a day we are looking at three new stocks getting listed. Mufti, that stock got listed, issue price was 280, ended nearly 11% higher. RBZ Jewelers 5% higher than the issue price of 100 rupees, and Happy Forge, that was one of the stocks which was doing good on large volumes. Happy Forge issue price was 850, ended the day at 1030, nearly 22% gains coming in for that stock. So good going for these IPOs, especially Happy Forge, just to mark the action in the primary markets.
Yeah, considering the fact that the debuts are fairly muted, at least for Mufti as well as RBZ, but they did pick up, momentum. Correct. And ended the day with good gains, if not solid gains. But yeah, no disappointment there. But on that note, Yatin, let's talk about some of the stocks that are on our radar this afternoon. Let's talk about the cement stocks, Yatin. That was the flavor of the day. Of course, we had Nomura upgrading some of the stocks from this particular basket. UltraTech Cement being one, hit record high. Market cap crossed 3 lakh crore mark for the first time, and it has been upgraded by Nomura to buy target price of 11,500 rupees, which is a 15% upside from current levels. Now, this is not the only stock Nomura has upgraded. It has upgraded Dalmia Bharat, buy rating target price of 2,900, which signifies a 32% upside from current levels. Also, Ramco Cement has been upgraded to buy target price of 1,250 rupees, 28% upside. On the flip side, Shree Cements, it has maintained the buy rating, but target price has been raised to 33,400 rupees per share, which is an 18% upside. Now, Nomura believes that the momentum is likely to continue when it comes to the cement pack. Volume growth is expected to be strong going forward, and also helping the cement stocks is the fact that fuel costs are going down as crude prices, have gone down quite a bit from $95 levels that that was there at one point of time. But of course, the Red Sea issue may create some turbulence when it comes to crude prices. It is already above that $81 mark, but Nomura believes that the impact, if at all, will be felt much later. Aside of volumes, what is expected to aid margins for cement companies is the pricing discipline. Of course, in the second half, in fact, in an election year, when project launches are expected to slow down post Q2, that could be some bit of muted muted demand for, at that point of time we could see some muted demand for cement, but even then, compared to what we have seen over the last decade, the volume CAGR is expected to be at 4%, which is much higher than what we have seen over the last decade. And volume growth for the cement industry is expected at 5% CAGR. That's what Nomura believes. So all in all, things boding well for cement companies, but one risk that could emerge would be the weakness in rural demand, which has also been flagged off by Nomura. Aside of that, volumes, pricing, discipline, these are some of the things that could aid margins for cement players going forward, Yatin.
Absolutely, and cement stocks are clearly outperforming with several of these cement names at 52-week highs or record levels. And as Nandita was mentioning, the cost is a tailwind right now, given the fact that crude, transportation and freight costs have been reducing overall, and the companies have been able to pass on the higher prices to consumers. In fact, I was speaking to one of the cement dealers who said that prices might go up in the month of January as well for the cement as a commodity, given the fact that the construction activity typically picks up in the second half of the financial year. But that was about cement. One of the stocks which is now on brokerage radar is also Protean eGov, recently listed company, very strong performance versus the IPO price. Equirius Securities today has initiated a long on Protean eGov with a target of 1500 rupees. Now, this is one recent company which has got listed. It provides e-governance services. It has a marketplace also, something like Amazon, which really is working well as of now. Now 80% of the revenue comes in on the pre-transaction basis across services. The company has been generating free cash flows and distributing dividends. So the most important point for any technology company is to really reward the shareholders by paying out good dividends. And if you look at the company, it is paying out dividend for nearly 2 decades. So before listing also, the company used to pay healthy dividends. In fact, it has a cash of nearly 650 crores on the balance sheet, and now the ONGC, which is the marketplace business, cloud and international expansion, are likely to drive the growth ahead for this company. So watch out for this one. The performance post the IPO has been quite good, has been trading off highs recently, but probably the brokerage like Equirius feels that this could be a good opportunity to buy the stock again for a target of 1500.
All right, good going for this recently listed company, but also good going for the paint maker, one paint maker in particular, Kansai Nerolac, given the fact that the stock hit a fresh 52-week high today on the back of the Lower Parel land parcel deal that it has struck with the Runwal Group. It's selling off this particular land parcel for 726 crore rupees. And, remember, Yatin, this is the second time that the company is selling off its land parcel. Back in March, I think the company had sold its Thane land to Hiranandani Group for 671 crore rupees. Now, this signifies a shift in the company's mindset, right? Given the fact that it is looking at an asset-light model and keeping cash in hands at a time when competition is expected to go up in the paint sector with Grasim's entry, right? Birla Opus is the paint company that Grasim is launching, and launch expected somewhere around 4th quarter of the current fiscal, which is January. So basically it is monetizing all its idle parcels which are not being put to productive use. And if you look at the company's books, it has already got cash to the tune of 1100 crore rupees or thereabouts and liquid assets. In a competitive environment, as I mentioned, additional cash always comes handy. And they've also looked at increasing their capacity as well as backward integration, and raw material costs have already come down quite a bit for some of the paint makers. And of course, the company is or enjoys numero uno position in industrial paint segment, and it is the beneficiary of a revival in auto demand as well. Prabhudas Leeladhar has also come out with a report on this particular company. It says that the company is taking all the right steps and valuations are already factored in expected increase in competition going forward and a threat to market share post Grasim's entry. But you know what, Grasim has always maintained that it is gunning for the second spot, which now belongs to Berger Paints, right? So as far as I am concerned, I feel there's no big threat to competition, but of course paint makers will be on toes because Birla is a big player, right? And if it is entering into the cement space, of course there will be heightened competition as well. But Prabhudas maintains that improving sales as well as profitability in industrial paints is something that will be a saving grace for the company, and it has retained an accumulate rating target price of 370 rupees per share. And it has also pointed out that 1 year forward, 25 times 1 year forward PE looks fairly okay okay valuation wise. So all in all, looks like things are picking up for Kansai, given the fact that it is putting all these assets to sale or good use, given the fact that it is looking to become asset light and have more cash in hands as it looks at competition.
Absolutely, and paint companies again like cement do benefit from falling crude oil prices.
Well, with that, I think we've come to the end of this edition of Closing Bell. These were all the stocks that were on our radar. Just about 2 more trading sessions left for this current year. We'll see, how it goes. If the momentum continues, as I mentioned at the start of the show, who knows, we will be staring at that 22,000 mark on the index. But with that, it's a wrap on this edition. Me and Yatin, thank you for tuning in and watching the show. But of course, stay tuned to Moneycontrol for all your other news and updates.